G'day everyone and welcome back to Pete's Investing. It's January 27, 2024. This is the Nat Gas price update along with some ETFs including BOIL, UNG KOLD. The overall trend is bearish and we've hit a major support area, so just keep an eye on that. First we'll look at the natural gas price update here. We've got the weekly, daily and hourly, and this is the commodity price. So on the weekly, first off, our CCI 400 is still trending sideways, although it's broken to the downside below the moving average. The CCI 150 is also tracking with the price, and that we use to track divergence. And for those new to the channel, you can see there's a couple of bearish divergence there versus the higher highs on the price, and both times it fell off. So just keep an eye on those divergence, and they happen throughout all time frames. On the daily, likewise, we're broken down below our moving average on the CCI 400. The 150 is tracking in line with the price, so there's no divergence there. There was a divergence back here, and the price fell off again. And on the hourly, we're pretty much trending sideways, I'd say, even though the CCI is breaking below its moving average. The CCI 150 is also tracking in line with the price. There was a bullish divergence, and that also broke up, hit our target. There was a failed divergence back here, but probably 90% of the time these divergences do hit their targets at the 23-38% Fibonacci levels. Next, we're going to be looking at ProShares Ultra DJ UBS ETF, which is BOIL. And again, you can see on the weekly, we're bullish movement on the CCI 400, likewise on the daily. There is a bullish divergence here on the CCI 150 versus the price. That's still in play. It's pretty much a double bottom, so it may bounce from there, and that's our target area, the 23 to the 38% Fibonacci range of that range. So that's our target on that one, on the daily. And on the hourly, the CCI 400 is broken to the downside, so bearish on that one, although it's starting to potentially bounce. There's no divergence. The CCI is tracking in line with the price. There was a minor bullish divergence here, and that did bounce and hit our target there. So again, we'll just keep an eye on that, see if it bounces from there, and that little dotted line there is marking the 61% Fibonacci level. So if it breaks much higher than that, we're going to see a continuation of the trend. Next, we've got the United States Natural Gas Fund. The ticker is UNG. Again, this is bearish on the weekly, somewhat sideways to bullish on the daily. The CCI 150s on both the weekly and the daily are tracking in line with the price. And on the hourly, it's in a bearish momentum, although there is a slight bounce, nothing too dramatic, and the 150 is also in line with the price. So that's also forming a double bottom. Next, we've got the ProShares Ultra Short Bloomberg Natural Gas Fund, which is KOLD. The moving average has been broken, and the CCI on a CCI 400 is broken below the moving average on the weekly chart. On the daily, it has been bullish for some time, although it's still sort of fluctuating above and below the moving average, and nothing too dramatic to the downside yet. The 150 CCI 150 is trending in line with the price. The price did actually retrace back past the 61% level. It sort of hovered around there for a number of days, and then it bounced off that support at $65, and it's made a bounce from there. On the hourly, we do have this almost a double top on the price, and that also aligns with the CCI 150. But you can see there the CCI 400 is slightly bullish. So overall, somewhat neutral on a weekly, but bullish on the daily on KOLD. So jumping back to the natural gas commodity price, to show you a very quick and easy trading idea. I try and cover these every now and again. So first of all, we'll put on a zero lag indicator, and that can be found on most charting software. You can see there's a light blue. Let me just zoom in a bit. You can see here there's a red and pink line, so when it breaks below, when they cross over, that's pretty much a sell signal, and when the blue crosses over the red, that's a buy signal. Now what I've done is I've also included, so again, only trade in the direction of the CCI 400. So in this case, during that period back there, between about the 10th or 11th, this is on a 1 hour chart, between the 10th and 11th of January, up until where it crosses above and breaks to the upside on the moving averages around the 23rd, 24th. We'd only go short during that period, and up in this period will go long. And I prefer to go short in this case where the daily and the weekly are also aligned, but you can do it in isolation to the hourly only. So if we do a zero lag for sell periods only during that period, you can see there you can sell, close, wherever they cross over. There's quite a bit of quite a bit of movement there, as you can see. But you can actually do one of two things and actually use the stop loss method, or you can average down approach if you're averaging down. So again, only trade in the direction of the CCI 400. And in this case here, when it does break to the upside, you would not use the sell method, you would use the buy. So again, only going long, so you buy there, close, buy, close, whenever they cross over on a zero lag. Anyway, just a simple trading idea. There's thousands of ways to enter and exit a trade. This is just one of those examples I've put in here just to show you an easy way of doing it, possibly if you want to follow some strict, disciplined trading rules as well. So also with some economic outlook, looking at key trends and developments in terms of price pressure and upward pressure, looking at the export demand for across Europe and Asia due to cold weather. Storage levels, obviously, you need to consider any of storage levels for this time of year. Geopolitical tensions with the wars in Ukraine and the Middle East and other areas, and potentially Taiwan in the future. Downward risks, economic slowdowns, potential for weakened global economic growth, and warm winter weather possibly. Other trends and developments, supply and demand situations and considerations. So production expected to remain steady in the near term with potential for increase for shale plays. Demand, increased domestic consumption for industrial and residential sectors, partially offset by lower electricity generation from natural gas. And technology advancements with CSS, which is carbon capture and storage, growing focus on CSS technologies to reduce environmental impact on natural gas production. And LNG infrastructure, expansion of LNG export terminals and pipelines supporting increased capacity. This is some data sources referenced to if you want to look further into a deep dive into the fundamentals. So again, just some analysis, a technical and a bit of an economic outlook on natural gas, including some ETFs. Again, just remember the overall trend is bearish with hitting a key support level at the moment. Hit that like and subscribe button, hit that notification bell. Thanks for watching, and see you in a future video.